Hey guys, it's Madaz here once again, and I really wanted to make a video for a couple of reasons today. First of all, finally got my new microphone in the mail, the Blue Yeti microphone. Got a really good deal on it on Black Friday, and I really want to get something a little bit more portable. Was previously using my large boom microphone that I used to use for studio recordings, and it was just getting too much of a hassle to move around. So less of an excuse for me to be lazy and make less videos. So now I have something a lot easier to use. It's a pretty good microphone so far. Hopefully it sounds good, and it sounds good to you guys as well. And during the whole Black Friday thing, I was trying to tweet out some good deals here and there. I tweeted out a couple good deals on monitors, like a 24-inch for like $100, and there was also like a 27-inch for $150 or something like that. So hopefully you guys took advantage of that. Definitely, I always stress that when it comes to trading, you need the best equipment possible, and you gotta be well equipped for battle. So hopefully you guys got some nice new monitors, or upgraded your computer. Got some new RAM, got a solid state drive or something like that. Definitely don't cheap out on those things. I mean, if you feel like cheaping out, you're gonna pay a lot more in terms of losses later on, as I found out. So definitely. When you have an opportunity, buy all those things. Okay, so if you guys need need me to make a video on the things that you need to trade, especially those of you looking to do this full time, I can do that. I wrote an article in the past on my website, but if you guys want me to make a video, I can do that. Just leave a comment below in the comment section. I'll go ahead and do that for you guys. All right, so another reason I wanted to make a video today, because today we got some nice organic movement on VRX at the open within the first couple hours or so. It was in contrast to the manipulated action that I was previously kind of noticing in the past couple days before this, and it's pretty good to kind of give you guys a nice side-by-side comparison. So you guys can go ahead and just watch the previous video, watch the action, watch my explanation, and just watch the action on this one, this video, and watch my explanation here, so you can see why it was a lot easier to trade VRX today compared to the other days. Okay, so I'll go ahead and talk about VRX, and I also got some live footage after to illustrate my point, which includes a really small scalp that I did. Unfortunately, couldn't capture the first move, but then once I kind of saw the action, I kind of realized, I might as well record the footage, get at least some of it, so you guys can kind of see what I'm talking about. Okay, so let's go ahead and talk about what happened with VRX today. VRX, pretty much out of the gate, not really any crazy volume or anything like that. Actually, wasn't even on my main screen. I was actually watching other stocks. But VRX, nice little dip out of the gate on low volume, and then it just kind of took off. Okay, and this is when the volume came. I mean, it seemed like on the 100 break right here, it looked like either the shorts were scurrying the cover or people were chasing long. Who knows? But either way, the volume came in, and VRX hasn't had a 600,000, pretty much hasn't had a 600,000 share 3-minute candle in a very long time. This doesn't really count, but let's see if we can find another time where it had 600,000 shares. Yeah, see, as you can see, it hasn't had it for, at least a week on this huge dump right here, it looks like. So that was the last time that VRX has had that kind of volume. So basically, when VRX has around over 600,000 shares, 607,000 shares, it usually indicates that there's probably some sort of big move. Okay, so that's the volume that's needed to kind of move the stock in this kind of way. So today we got similar volume here. We got 669,000 shares, almost 700,000 shares. So pretty much instead of the down move that we saw over there, we got a nice up move. So we got a 100 break here, and then pretty much a 102 test and reject, and then it started fading off the rest of the day. But why was this considered an organic move? And I call this an organic move because you can see right here that when it took off, it gave us nice dips. Okay, look. It took off from 97.5, ran all the way up to 101, and it dipped back to 99.7. Okay, so that's about a 1.2, 1.3 point dip in a relatively short amount of time. This is something that we previously didn't see, and once I noticed that, I started scalping the longs. You can see that it went up to 102 off of that dip, so nice little pop back up. A nice little two point pop, and then a dip back down to 100, and then back to 102 reject. So another nice little 2-point pop, and it did that again over here, went back down to 99.7, popped back up to about 101.8. So this time it was only a 1 point pop, but nonetheless it was giving us nice opportunities to get in. And this is something that we previously did not see before. I'm gonna go ahead and just go over really quickly on the action the previous day, but definitely if you want more thorough explanation, watch my video on identifying manipulation, where I kind of thoroughly go through it a little bit more. But you can kind of see, for example, right here, the volume was half of the volume that you saw today. So 300,000 on this largest candle right here versus 600,000. As you can see on this move up from 90.9, 90, let's call it an even 91, all the way up to 93. You know, it's a 2 point move, but it took place over 6 candles, which is, these are 3-minute candles, so that's 18 minutes. So it took 18 minutes to move 2 points. So first of all, the speed of the move wasn't as great. So this is more of a linear move. The other move was more of a parabolic move. So I always stress that panic equals an edge. So this is not really a panic. This is just kind of like a grind up. So it just kind of moved up 2 points in a span of 18 minutes. And also you can see there's no wicks in between. So that means there wasn't really much of a dip for us to get in on this move. There was a little nice red candle here for us to scalp. Not sure if I actually scalped this move, but nonetheless it kind of went back down, and then the candle just grinded back up, then sideways, grinded back up. And you know, sideways, grind all day. But today you can kind of see that lots of faster action, more parabolic price action, lots more wicks, and these wicks usually signify opportunity, as I always say. So this is more organic. When you see a stock move up really quickly, it usually has to give us a dip to get in, and this is what it's supposed to do when there's less manipulation. I wouldn't say there's no manipulation, but this is when there's less manipulation, possibly because maybe there's a lot more retail traders involved, a lot more emotion involved, causing these kind of wicks on these candles right here. People chasing 100 and panicking when it drops below, or whatever, or shorts chasing 100, or it doesn't matter who it is. But nonetheless, there's an opportunity and something to take advantage of. Okay, so that's that. Comparing organic movement and inorganic movement. The next part is I want to go over a little bit of an more advanced concept when it comes to scalping, and I want to talk about how I am able to anticipate the scalps. A lot of people always ask, how do I get in and get out so fast? How do I know it's going to drop? You know, how do I react so fast? Okay, when I see this wick, how the heck do I get in at the bottom and then sell near the top so fast, when a lot of people would just glance at it and completely miss the trade? Okay, so how am I able to do that? So basically, trading is about using patterns. Okay, you're basically like a detective. You're using clues to figure out what's going to happen next. Okay, you're trying to solve the case right here. So you're using history to solve the history. Okay, so you're basically using trends and you're trying to predict the future. Okay, if that makes any sense to you. So as you can see right here, VRX, after it made the move, I was still scalping this long. Okay, on these wicks, because there's still opportunities as long as there's range. Okay, as progressively as we went on later in the day, the range got way too tight and I pretty much just stopped trading it. But as you can see, there were still opportunities, because these wicks still gave us a chance to make a couple cents on the bounce, and then the risk reward kind of eventually diminished, like I said. But I was still scalping it with half size, still making, you know, $50, $75, $100. It was still nice profits. The trend was still predictable. The washouts were still predictable. And why were they predictable? Okay, you can kind of just look at the candles. You can see the range of these candles. Okay, and you can kind of understand that usually VRX it's capable of washing out how many points in a given amount of time. So if I'm looking at a time frame of a really fast washout on one 3-minute candle, I'm looking at the size and the range of this candle, and I'm going to use that as kind of like my guide to figure out how much of a washout should I wait for before I get in for the next bounce. And of course, you got to couple this with support and resistance. Okay, the more indicators you can combine together, the more powerful the move, the more edge that you have. Okay, so basically, for example, on this candle, you're looking at a range between 100 to 102. Let's call it an even 2-point-ish range on this little washout, if you want to call it. This candle you're looking at looks like 101.23, 99.7, so about a 1.5. So these two red candles right here, about 2 points, 1.5 points. This red candle right here, you're looking at 100.3, 98.7, you know, about 1.5 points again. So pretty much what I can deduce from this is that VRX is capable of washing out between 1.5 and 2 points, around there, okay? So moving forward, I'm going to look for washouts of around at least 1.5 points, and combining that with my technical analysis and identification of support and resistance to kind of determine where I should anticipate a washout to. So for example, on this little move up, I'm gonna wait for a washout to get in. Okay, so the top of this candle right here is about 99.7, and then the next candle it dipped to 99.5 here, and then it went down to 98.2. Okay, so that's pretty much spot on, about 1.5 points between the top of this candle to the bottom of this wick. So 99.7, 98.2, that's spot on, 1.5 points. You get in right there, around there, you sell the next pop. You just made yourself a nice 1 point per share. Like I said, I captured this footage late. The risk reward got a little bit less, but hopefully this still illustrates the point. Okay, so that's a good example right there. I probably took this trade. I'm not sure if I actually did. But as you can see, as this stock kind of grinded down, you can see the next move right here, 99, and then you see 97, and then it washed out a little bit here. Stalled here around 99, and then you got 97. That's about 2 points, and you gave us a little bit more here, so about two points on this little washout. Remember, you gotta wait for these huge wicks. These candles didn't really give us a nice wick, but this one did. So this is the washout you want to get in on. So this is about a little bit more than 2 points. You can buy in about right here and then sell right here. Make a nice close to about a point there. Nice little scalp there as well. So overall, you gotta observe the behavior of the stock. Okay, it behaves differently every single day. You gotta kind of observe what it's been doing, and you gotta use that information to kind of predict moving forward what to expect. As always, it's not gonna always work, but as long as the same pattern keeps showing up, you should be able to use that as a guide for you to anticipate this kind of action. So until it washes out more than 2 points and it just keeps going down or whatever, you should expect that VRX, as long as there's a close support level in proximity to these washouts, there should be at least a little bit of a bounce, provided that the stock is not manipulated. So if you see like about a 2 point drop, and then you see a wick and it's near support level, it's pretty good chance that it's probably gonna bounce. Okay, so that being said, I'm gonna go ahead and pull over the footage for you guys. Let me just drag over the window over here of the video. So it's a pretty short video actually. I kind of got it late, but hopefully it illustrates the point. All right, so we pretty much got VRX as it dips around off of this 102 high here. It's dipping down to below 100 now in the 98s. So we're gonna go ahead and observe this action and see what it does. Again, I'm looking for a 1.5 minimum, ideally a 2 point washout. And again, it's not really a solid risk reward trade, so I'm going to be doing only 250 shares on this trade. So just in case that decides to drop more, I'm leaving myself some room to either scale in or just bail at a small loss. Also want to make a note that when the stock is kind of just teetering like this, it's kind of absorbing a lot of the potential dump or whatever you want to call it. It's basically dissipating the strength of the dump. So the more it kind of just stalls, the less likely that the less likely that the bounce is going to be as good. So ideally, you just want a quick sharp drop for a stronger bounce back up. If you want to look at it that way, it's more like a bouncing ball effect. So you want to, the higher you drop the ball, the more likely it's going to bounce. So you kind of just stall it right here. It's not going to be as strong. So you want to see some fast action right here. It's just kind of stalling out here in the high 98s. So ideally from here, you want to see back tests of the low 98 support, high 97s actually. So that would be over a 1 point drop from here. Still stalling here in the high 98s, unable to break over 99. So if you were to just randomly buy into here, it would be very risky because you don't know what's going to happen. So you got to wait for some sort of panic action in either direction, either a 100 reject if you wanted to look to go short, or a washout down to 98 or even below that for a long. So right now it's just pretty much just grinding and trading in a very slow range, slow tight range in the high 98s and low 99s. Still patiently waiting, no trade right now. Now we got a little bit ramp, mid 99s. Looks like we got a move toward 99.5, 99.6 there. So remember, keep in mind the tendency for VRX to do about a 1.5 to 2 point drop. So that's what I'm looking for. So we're looking at the highs of 99.6-ish, 99.5, 99.6. So a 1.5-ish drop from there would probably mean a washout toward 98. So 97, 97.5 or 97.5 or 90 low 98s would be an ideal target for a washout long for a high percentage bounce play. Should be coming up soon. See some sell pressure on the ass. You can see some size kind of show up a little bit. Struggling a little bit. So basically it's almost a 100 reject so far. Although they didn't quite get to 100, but you're looking at prior support close to 100, high 99s coming in as resistance combined with the VWAP. So you probably could have taken the short here. So now we're getting a little bit of a dip. There we go. Speeding up a little bit. So it's already washed out about $1. There we go. 98.3. It's already washed out about $1.3 points. Got filled there 98.35. A little bit of jumped the gun a little bit there. Wasn't the best fill. Could have waited a little bit more and gotten closer to 98. But as you can see, it tested close to 98. Like I said, that 1.5 point washout. And it should give you a quick, immediate springboard type pop back up. That drop kind of caught me a little bit off guard. I had my order in at 0.3. I should have just punched in 0.2, but it happened so fast. I just hit buy and I got filled at 3.5. So it wasn't the best fill, but definitely you could have gone maybe 98.1, 98.15 there. So basically close to a 1.5 point drop, and it should get a pop right back up for you to sell into pretty soon here. Should be coming up. There we go. So I just sold it at 70, made like $90 or whatever that was. But hopefully that illustrates the point. The execution wasn't the most spot on. I could have probably gone in at 98.1 and then sold it at 98.8 and made 70 cents right here, as you can see, 99s. But you can see the point that I'm trying to make. If you can kind of gauge the behavior of VRX and see how it trades, as you can see, it just went over 99 there. But as you can see, if you can gauge how VRX trades today, it has a tendency to wash out about 1.5 to 2 points. And it usually gives a nice little pop back up, little springboard pop back up immediately right after. That's pretty much what I'm looking for, okay? And that's how I anticipate it. So I'm watching the chart, and I'm looking at it, and I'm seeing that, okay, VRX is going to wash out 1.5, and it usually bounces back at least a point or whatever. Then I'm going to be waiting for those 1.5 point washouts, get in, and sell the immediate pop for whatever it may be. Okay, so hopefully that kind of illustrates the point I'm trying to make here. It's a little bit more advanced. Like I said, you kind of have to combine it with support and resistance, and of course you have to be very, very quick with your orders. So hotkeys, and pretty much have extremely good hand-eye coordination to do these kind of trades. but they're very, very, very high percentage. As I told you before, it's based off a pattern. So if you see that pattern pop up over and over again, might as well exploit it until it doesn't work anymore. So eventually VRX later in the day, the range got really tight, and although there were a couple okay plays, it didn't really give us this kind of large action anymore. Like this is the last wick right here, and then after that it kind of just grinded. So I pretty much stopped trading VRX after 11 o'clock. So you can see the stark difference between the action before 11 o'clock with these wicks, and then the action after 11 o'clock when it started grinding. A couple of wicks here and there, but for the most part, not as good as the morning. But you have to combine this overall with support and resistance, like I said. So you have to learn how to do some solid technical analysis, and pretty much gauge the entry with being really fast, and using the information that you see here. Look at the average washout moves, and then combine that with support and resistance. Combine that with being really fast. Combine that with risk management. If the range is getting tight, obviously downsize your position, or if you're really sketched out by it, don't even bother with it. I definitely, like you saw right there, I only did 250 shares on this move on the way up when it was giving us a lot more volatility and range. I was doing 500 shares on these moves, but as you can see, when the candles got a little bit smaller, I went with a half position. Still got some money out of it, but you got to protect yourself as well. So if you guys have any other questions about this little trick that I use, feel free to tweet me as always, and leave a comment below. Hopefully this live trading footage illustrates the point very well. And yeah, that being said, thanks a lot for watching, guys, and we'll see you guys next time.